All right, welcome everyone to another special edition of Pre-Market Prep at the close. Spencer Israel, Joel Elconin, joined now by today's special guest, Luke Jacobi. Luke, I'm not really sure what your title is. What is your title, Benzinga? Vice
Well,
President?
I asked you to call me Hot Stocks Luke
All right, I'm
for
sorry.
this show.
Yeah, you're right, you did. Hot Stocks, Luke Jacobi, Vice President at Benzinga. Luke, thanks for stopping by today. Hang out with us for the next few minutes or so. Before we go to you, we'll start off. I'll throw to Joel here. Joel, give us a quick update on the market. I am extremely wrong so far in my bearishness.
You're not the only one there, Spencer Israel. We're green. We got some major green on the screen. Those that follow the 2-day rule, you are being rewarded today. Triple D nailed the open there with the buy-in balances, the big old buy-in balances. We ran up early, just missed that pre-market high, and then we gave it all back. We snuck under 2,400, and I think everyone was waiting for the bottom to cave in there. And the dippers came in. They came in with a vengeance. They took it to the pre-market high, which was 24.98. They took it all the way up to 2560.75. That puts us right near our 4-day, puts us over our 4-day high, but not quite at our 5-day high. So nice snapback rally. And we've just been a chop fest here over the last, I'd say, hour and a half or so, trading between 25.10 and 25.50, trying to blow the roof off that 25.50 and close strong. Crude up 73 cents to 24.74. Gold and silver going the opposite way, folks. Gold down 15.80, which is almost 1 percentage point at 1,645. Silver, oh man, did I mess up that silver trade? Silver trading up 45 cents at 14.715. Big divergence in that on the way down, and then silver is fighting back. Bitcoin futures are down $85 at 6,640.
All right,
And
Luke. Yeah,
I was gonna say, Spencer, can you put it to like a 5 minute chart or maybe a 1 minute chart
on
on
on on
the E
what?
minis?
I mean, mini, sure.
And Joel, like you mentioned, we've been going sideways, pretty much all afternoon. What does that mean, or like what is your read when
Um,
we get days like this?
well, this is not really a sideways day. This is it's not quite an expanded range day. It's just like the early action, was pretty clean. The action here over the last half hour, 45 minutes is not as clean. But for me, I do my simple levels. I look at the pre-market highs and pre-market lows. And once you take out that pre-market high or low, you get a lot of continuation move. That's what happened today. Can't make much of the trading action here over the last hour, but just close anywhere in this area would just be a big, big, big positive for the market. Just to close. To me, I'd be happy closing anything over 2,500. So that's the making sense out of the entire day. Over the last hour, you got a lot of chop and slop.
Yeah.
So Luke, one of the reasons I wanted to have you on is because you've been investing for about as long as is possible without having been through something like this, right? I think you've been investing since just after the financial crisis. Is that right?
Yeah, 2009 was my
Okay,
first year in.
right. So this is you've been in for over a decade, and yet this is really your first crisis as an investor. So how have you approached the past few weeks?
For sure. I mean, my time horizon is long. I like to play around with stocks, on a shorter term basis. But in terms of core holdings, my time horizon is long. And my message throughout all of this has been the same, which is I've just been averaging in, just average down, average down, average down. The rule that I use is every 5% dip, I'll roll a little bit more in there. Margin is so cheap right now. I think Interactive Brokers is charging me under 1% for margin, and there's a lot of it available. So even if I have to hold into a losing position for a year or 6 months, and I'm just holding SPY that costs almost nothing to borrow, but I'm averaging in when the market's down, 30, 35% off of all-time highs. I'm okay with that.
So you're using margin right now.
Yep, I'm more than 100% long right now. You know, could we be in for more downside? I think, you know, absolutely. We definitely might be. You know, but again, I've got a really long time horizon, and I'm okay taking some of that downside.
Right.
You know, go ahead.
No, that's what we talked about this morning, is accepting the fact that you're probably not going to see any short-term returns at all.
Yep, absolutely. And you know, but speaking to that though, here's the thing that I'll say is that compared to 2008 type crisis, you know, I think that there's a lot less uncertainty. We know, you know, that there is going to be an end to this, and you know, once everything's cleared up,
How do we know that, Luke? I mean, how do you know that, Luke?
I mean, if there's not an end to it, I'm you know, buying shotguns, not stocks, I guess. But I mean, you know, maybe it takes 3 or 6 months, you know, for things to get cleared up, and the world is going to look relatively how it did after that. That I suspect.
Right.
Versus in 2008, you know, we didn't know what would happen. You've got the banks failing, you've got the government deciding whether or not to bail out the largest companies in the country. You know, I mean, the whole system was under pressure. You didn't know if everybody's going to be homeless. You know. That's why I feel relatively comfortable with this one, where yeah, I think that there probably is going to be more short-term pain. But again, if I've got the opportunity to average in when we're down 45% off of all-time highs that we were just making in February, I'm taking it.
Right, and I'm sort of in that same boat where on the one hand, I've been dollar cost averaging this entire time, but on the other hand, I do have cash, and I mentioned a few weeks ago that I did 2 rounds of buying, I guess about a month ago, 3 weeks ago now, and I've been sitting on my next round, unsure of when to pull the trigger. These past few days are not making me feel great because I was expecting more pain to come. And I'm steadfast in my bearishness for the short term, but I'm wrong this week. So
Do you have like an uncle point at all, Luke? Like where you
What do you mean by that? Like when I give up?
Yeah.
Nope, I don't. I mean, if we're down 60%, I'm still going to average in. You know, again, the cost to borrow is so inexpensive right now. You know, I've got a decent bit of margin on, you know, about 120% long or so, and it's costing me less than $1 a day to do that.
Okay, I think that you're illustrating a great point here, and it's, you know, where you're at in your investing horizon.
Absolutely.
And Luke, you're a young kid, man. You're a
Yeah.
young buck there, and not married yet, but you know you got a long time horizon on things, and I think that that's the way that, and I think I've been saying that, you know, on the pre-market prep show and the other broadcasts that I go on, you know, where are you at in your investing horizon? So that money, like, you don't need that money, right?
I don't need that money.
If
Yeah,
that money went
and
kaplooey, it wouldn't affect you. You're still gonna eat. You're still gonna do things. I know you need to buy a car. Did you get a car yet, Luke, or
not
not?
yet.
Not getting away. But no, I think that's the kind of philosophy that young people have to have.
So Luke, we've been talking on the show about getting our shopping list together, and we've all shared a few
All right.
names, and I know you have a few names on your shopping list. Maybe you're not buying them right now, but you're interested.
Cool. Let me call them out. First one, NYT, New York Times. Here's the thesis here. Everybody's working from home, or maybe a better way to put it is pretending to work from home. You know,
Whoa, speak for yourself there, buddy.
web traffic is way up, especially with you know, we've got a really heavy news cycle right now between both coronavirus, elections, that sort of thing. I bet that New York Times has killer numbers. I bet they've got a ton of traffic. So you know, they're going to get that ad revenue, and I bet they're also converting a lot of subscribers, especially as the news is you know, sort of a life or death type situation right now. So I'm hanging out until their next quarterly report. I think they're gonna have an awesome report. So that's one that I look now.
Allow me to present a counter argument real fast. I'll give you the subscriber growth. I'm really not sure about advertising money though. Sure they have great. I'm sure their traffic is through the roof, just like ours is. But you have to be able to translate that to advertising dollars,
Yep.
and I'm worried that since we seem to be heading into a secular recession here, what that could mean for advertising budgets
I
across
just
the
want to
board.
say here, folks,
Yeah.
the late day price action is not what the doctor prescribed here. We've just lost about 60 handles here in the last
Ooh.
15 minutes. The sellers are coming to
Whoa.
roost. The high of the last bracket was 25, 24.50. That would be the final bracket here going into the close. And we just hit 24.69.75. So that was a 65-point move down there.
Wow.
Is that a 5-minute chart you have up, Spencer? Or what is that?
It's a 15.
15. Okay.
Okay, so New York Times. I'm not as convinced as Luke is. Luke, what else is on your list?
Stryker. That's another one that I like. It is a medical device company. They got hammered, sort of like the whole market did, and they didn't get a lot of the pop that other medical device companies do. They make things like hospital beds. So if we are loading up facilities, making temporary medical facilities, I bet they could have a pretty strong quarter as well.
Do we got any news? Did you see? Is there any news out here at all? I'm not keeping an eye on my pro.
Yeah, hard to keep an eye on pro and also do this at the same time. I'll check if I see something, I'll let you
Okay.
know.
Okay.
I also wanted to go from the chat. This was there are some headlines as it relates to the Senate's coronavirus bill, but I'm not sure if that would do it. He said it wouldn't be unanimous. I'm not really sure. Trying to
Okay. I
interpret
mean,
these
that
on
would
the
be
fly.
That
something.
could do it. Yeah, I think so.
Yeah, that would it be.
Uh,
Let me look at Stryker here for you.
Yeah.
Stryker has not quite rebounded with the market. I think that if you're is this a long-term play, a quarterly play? How you looking at it?
Yeah, I want to see the next earnings numbers, and I want to see if they guide off of that too.
Okay. I think I think this is kind of, you got to look at this as a coronavirus play, right? And I
Exactly.
think
Yep.
that the
Exactly.
interim, yeah, there's going to be more hospital beds, but if this thing is, when and it's resolved and everything, Sanders vetoed the bill. I don't know what that information is coming.
That's not that important.
Yeah.
Because you don't need
So I
unanimous.
see. You want to see a good quarter. I mean,
I want
I
to see a
agree
good
with it.
quarter, and I want to see some good commentary about it. Because again, I mean, if this coronavirus thing is a long-term deal or something that we're working on as a nation, medical device companies I think are pretty well positioned. And I liked that one. I picked it up a couple days ago, maybe Monday, I guess. Just because it didn't get a bounce like a lot of the other medical device companies did.
Okay. All right. I liked it on a relative strength base. Well, let's see. This one did bottom with the rest of the market here. Or let me see when it made that. I pulled up Kellogg instead of, man, when it gets like this, my platform gets a little bit slower.
When it gets like end of the day crazy.
Yeah, now this did bottom on Monday here at same as the market at 124.54. Just short term, Luke, and this is just a real short term number. Sure like to see this thing close over 158, 159. You did spike up to the 157 area 4 days ago. Your high today, 158.22. So for a continuation move here, along with the market getting better, you really need to get back over 160 here. Then you got a little bit of an air pocket up to 166.
All right, I got my numbers now.
I wanted to go back from the chat here. Micron is the notable earnings report happening after the close today. So I'll pull up the chart of Micron. Joel, I'll have you look at it here.
That bottomed ahead of the market. It's down today. I mean, if you're looking at this as a long-term investment, you have the low of the move. That's kind of the same area. Now, this hit monthly support here The support that it bounced off in early 2019, it got to that area again when it went to 31.13. So don't mind this trade. I don't know how much this report is going to, reflect the upcoming, what's going on, but certainly tech companies and chip companies are, are a big part of the future. So fundamentally, I like this. Can't tell you exactly what that earnings report's going to be like, but it's trying to rebound just like just like the rest of the market, and just crazy monthly support in that 30-31 area.
And Joel, let me ask you about this while we're talking about
Sure.
Micron. So the types of names that I've been looking for are stocks that are way down, like underperforming. I don't know what the bottom was, maybe 35% off the highs in the S&Ps. I'm looking for stocks that are down 50-60% off of the highs. And trying to do some bargain shopping there. I mean, Micron's only given up to where it was in October. So what's your thought on looking for some of these stocks that have been especially hammered while we're in this?
I mean, there's chances are that they're going to be, that if they're hammered more than the market rebounds, they're going to rebound more. For example, GE lost 55% in the decline where the market lost 35. GE has really outperformed the markets the last 2 days. So yeah, if it was if an outperformer on the way down, then the market rebounds, finds footing, there's a very good chance that they could be overperformers too, just because they of what happened. So is that answer your question?
Yeah, like another name, sort of like GE that I picked up was Ford Motor.
Okay.
That thing got absolutely hammered, and when I bought it, I mean, look at that. It went from, what is that, 9.5 down to 4.
Yep.
It was paying, the dividend yield was up to like 16%, or something along those lines. And I mean, you brought up the point before we came on air, that even if it just goes sideways for the next year, you're still getting paid 16%. The company's got plenty of cash. So I don't suspect that there'd be dividend problems. The manufacturing is shut down, so that's not great. But again, it's one of those stocks that got hammered hard, and I don't think is necessarily going anywhere anytime soon.
Yeah. And they did, they survived the last crisis, and as without getting government money.
Yep.
So I mean, that's a big yield, and you picked it up at a good price. So you got a lot of protection now. Like I said, if it just stays flat, then hey, where are you going to get 15-16% on your money?
Yep, I like it.
All right, so about a minute plus left in the trading day today. The big question for the next 16 and a half hours is how is the market going, at least the big question for me, is how will the market react to tomorrow's initial jobless claims report at 8:30 a.m.? We know it will be bad, but we don't know what the reaction will be, how much that is.
What's the estimate, Spencer?
I don't know the estimate. I'm sure it's extremely high. The last week's reading was 280,000. I'm sure it's far above that. I don't have the estimate in front of me though, but I'll bet you my house that it's through the roof.
I mean, it's going to be a couple times that, right?
You would think so. The California governor, this is from Reuters just now, said they had 1 million in jobless claims filed this month.
Wow.
So so tomorrow we'll get a weekly jobless claims report, and we'll see how bad the damage is. But it's gonna be.
What time is that out, Spencer? 8:30?
8:30 Eastern time, and it'll be a doozy. So Joel, as we head into the final seconds here, what's going on out there?
Well, I was hoping for us to close over 2,500. Doesn't look like that's going to happen. We got a minute going into the stanza. I mean, we're still up a percentage on the day, a little over 1%. Let's just call it the way this thing's moving, 2460, 2470 area.
There we go.
Yep, I'll be watching the after hours action and pre-market action. It's kind of hard because everyone knows it's going to be bad, right? So maybe all the people that knew it was going to be bad, sold into this rally. There were a lot of profits accumulated. We had almost a 400-point rally since Monday's low. Very, very unusual. But we'll do, and I'll do my homework tonight for you. And I could tell you exactly right now, what was the low on the move. Hold on real quickly, and then we'll let you guys.
While you're doing that, Joel, I got the number, Spencer. It's 1 million for jobless claims is the consensus right now.
I'll take the over.
Yeah, I mean that's probably fair.
Okay.
I mean, and 1 million sounds like a lot, but to put that into perspective, there was a few press releases of companies that are actually hiring right now that came out. Is Papa John's, I think, was hiring 50,000.
And
CVS,
Amazon.
I think, was 100,000.
Kroger, Amazon, Target, Walmart, they're all hiring.
And I mean, when they're throwing out numbers in the hundreds of thousands, and that's just a handful of companies, and you got, maybe call it 1 million businesses or 500,000 businesses across the country that have more people opened up.
There's demand for jobs.
Yeah.
Yeah. We'll be keeping an eye on 20. Let's just call it 2370 tomorrow.
Okay.
That's 100 points from here. On the downside, regardless of what happens tomorrow, if we go and test that level, break that level, I would like to see us close above it, so that 100 points away. Who knows what they're going to get excited in the after hours and pre-market and whatnot. But you had a 400-point move. It's not illogical for it to have a retracement of some of that move, and we like the 50% retracements. That's what we'll be keeping an eye on here, and it's the first month of this, so we're gonna have these rocky Thursdays. We're gonna have the unemployment number coming out next week, and we're just gonna have to sit. There's gonna be jobs lost, and there's gonna be new sectors emerging, and that's just gonna be the theme here moving forward.
Yep. All right. In an odd bit of symmetry, we were just joined by Luke Jacobi, who is Joel and mine's boss. And on tomorrow's show, we'll be joined by Dennis's boss, Rob Friesen, the president of Bright Trading.
Segue.
Thank you. He'll be on this show tomorrow at 8:35. Thanks to Luke Jacobi for joining us today. We appreciate it.
Spencer, it's Hot Stocks Luke.
Oh my God, I'm sorry. I keep screwing that up. Hot Stocks, Luke Jacobi, for joining us today. He's vice president at Benzinga. Luke, thanks for the time. Thank you all for listening. We'll be back with you at 8 a.m. tomorrow. Everyone, as always, be safe out there.
All right. Thanks, guys.
Bye.
All right.